Welcome to the DeFi podcast, where we attempt to imagine the future of crypto because foresight is what makes great investors. This podcast is for informational purposes only and should not be relied upon as a basis for investment. All statements made by hosts or guests are strictly beliefs or point of views and are not recommendations to buy, sell, or hold any security. Hosts or guests may hold certain securities discussed in this podcast.
Hi everyone, I'm JF. I'm the head of growth at Moremoney Finance. I'm an ex-founder and CFA Charterholder. My co-host Jared is a crypto and equity trader and an ex-founder in the crypto space. So today we thought that we would talk about what's happening in the markets.
So the stock markets are down pretty heavily. The S&P is down 15, almost 16% from its high back in December. There are talks about recession. The Fed is raising interest rates. At least in the U.S., GDP is down while inflation is very high. And yet the dollar is still pretty strong. The Federal Reserve have actually talked about how there's currently too much money in circulation and that they kind of messed up in their policies. What I'm looking at right now is the markets need to come back down. You look at the price of gas and the price of oil is up. All commodities are just going to sky high levels. So at this point, if you look at the correlation between, for example, the S&P and crypto, they're very close. If the S&P goes up, crypto goes up, and if the S&P goes down, crypto's going down. I think this is mostly due to the fact that institutions are holding large amounts of Bitcoin, and now that crypto is starting to eke its way into the mainstream, we're not going to see crypto kind of having a sort of inverse correlation with the stock market, at least not anymore.
So I completely agree with the last point. I think crypto and the market are becoming one. I think initially crypto was really let's call it a store of value / commodity. A lot of the crypto projects that are coming out now are actual projects. They're like companies. So it's sort of an extension of the market. I don't know why crypto should do so differently than the market. So if you look at the historical P ratio for the market, it's usually, you're looking at a median of around 15. Currently, we're sitting at 21, which is a little bit higher. But if you look at all the technologies that we're currently developing, and I'm thinking about AI, solar power, batteries, additive manufacturing, gene sequencing, etc., including blockchain technology. If you put all that together, it's pretty bullish, I think, for what's going to happen in the next 5 to 10 years. So overall, I think we have potentially a bright future ahead. And having a higher P ratio is something I'm personally comfortable with. Gary Black had a tweet a couple of days ago, and where he sort of looked at different factors. Maybe we can put it up on the screen. One of those factors was the forward-looking P ratio based on current prices and future earnings, and he's calculating 17.4 for the coming year. Again, pretty comfortable with that. And then if you look at just general stats from the economy, unemployment is at 3.6%. The CEO of Bank of America was on Fox Business a few days ago, where he looked at their internal balances and stated that people who used to have $1,000 to $2,000 in their account pre-pandemic now have around $7,000. People who used to have $2,000 to $5,000 sitting in their account now are looking at a balance of around $13,000. So pretty bullish there as well. And then if you take a step back and look at the economy, fundamentally speaking, a lot of companies are going remote, which means that they're going to be spending a lot less on real estate. Not great for commercial landlords, so there's going to be a loss there. But overall, for the economy moving forward, you're going to be spending a lot less on rent, which is going to go straight to the bottom line. Then you have all your workers who are not spending 1 or 2 hours in traffic every day and wasting energy and not producing anything. So potentially these people are going to be a lot more productive, or at least produce higher quality work. I think we all know this. When you get to the office after an hour of travel, you're just not as sharp as if you start right away and then take a break and then do more work. So productivity should be going up moving forward. And then all the transport costs of moving in and out of a downtown area or just getting to work every day, not having all those costs is going to be impactful for the economy as a whole, obviously. So I get that there's a lot of fears. We're moving into a situation that we haven't quite been in before. The government's done incredibly irresponsible things with money printing over the past 2 years. And there's a lot of inflation as a result. And on top of that, we have a war, which is cutting off supply for certain commodities, which is then putting more pressure on those commodities. So obviously, that's not a good situation. I understand why investors are concerned. But if you actually take a step back, things look okay to me. Not saying that the market's not going to head down. In the short term, anything can happen. But I'm fairly comfortable with the future outlook.
Okay. So moving into crypto, Bitcoin is currently down about 45% from its recent high, November, of 69,000. I'm not expecting it to regain momentum very quickly, considering the momentum right now, at least long term, is downward. There's too much fear in the market, and the trading volumes are just not there. People are looking for safe havens, and they're not going to get back in so easily because the growth rate of people coming into the market is not going to always be at super high levels. Like at some point, they look at the price of it and they're like, whoa, that thing is way too high. It's kind of like an elastic band. It'll swing really high in one direction one day, and then it swings completely back in the other direction the other day. So the current rate, I think, just like the stock market, I think crypto needs to be heading into an area where people look at it and say, that's undervalued. I want to buy. So moving forward to Avalanche, AVAX is down about 60% from its all-time high right now. And the way that we see sort of the interplay between Bitcoin and altcoins, meaning any coin that's not Bitcoin, the one with the larger market cap is going to be kind of like the safe haven in crypto. So we're not going to see any of these smaller tokens really having any major price breakthroughs back up into the green, unless they have some kind of significant news or great thing happening to them. And so, people are going to be looking for safe havens right now. A lot of that is probably going to be stables. Reversals are always possible. I think we could see prices start heading back up, but I don't think they're going to be very well sustained. I think they're just going to be short little sort of relief rallies from the recent drops. So for the prices to start coming back up, I would want to see, for example, Bitcoin to head into an area that has very good price support. I'm coming at this from a perspective of technical analysis. So in technical analysis, when you find an area of support, you should be able to look at a chart and see an area in the past where the price of an asset has gone down and stopped and then reversed. And this would be considered a support point where you have just a sudden reversal or it's kind of a halting point. There are different reasons for this. Mostly, I think this is kind of the effect of supply and demand. And support and resistance is visible everywhere in all markets. You can see this with the stock market, with commodities, with Forex, and with crypto. You can kind of forecast these outward, and you can look at sort of historical areas of an asset. Where has this stopped in the past? So, you can see that, for example, previously, Bitcoin fell somewhere around the 30,000 area, and then it headed back up from there. And that's where we saw the most recent all-time highs from Bitcoin stopping in that area and then heading back up. So the trend of a price is also kind of a factor in between your support and your resistance areas. And this can be different depending on your time frame. And you can see trends in markets on all time frames. You can have a short-term trend, let's say 1 week or 1 month, within a long-term trend of, let's say a year, that can be going in different directions. You can have a short-term uptrend in the middle of a long-term downtrend. But, we can always see Bitcoin go up, $5,000 to $10,000. But does that mean that it's going to continue? Currently, I don't think so. So, JF, what's your perspective of this method of trying to gauge the market?
It's not a method I put a lot of stock into, especially in traditional markets where I think the markets are a lot more mature. You have a lot of different actors doing different things. Uh, that being said, in crypto, where you have a lot of people actually doing the charting, it could become, to me, a self-fulfilling prophecy, right? So if everyone believes in the charts and is acting based on what they see in the charts, and they tend to agree on what they see in the charts, it could actually create like price movements. So I think there is some validity to it in the crypto market, at least at this moment in time. But generally speaking, I'm not a trader. I don't think in the short term. I think long term. I am always looking at 5 to 10 years. Whereas I think technical analysis is more focused on the short term. So it again applies not so much to me. Yeah, that's my polite way of putting it.
So what's your not polite view of putting it?
Yeah, I mean, I think the word astrology comes to mind, but you know, let's still be
Okay.
friends after this podcast.
So, are you a buyer right now? What's your method of trying to make the most of the current environment we see?
Right. So I generally don't trade on macro events because I just don't think I can predict the future. I again trade on where I think things are going long term. That being said, I do think that the crypto market is, as I've mentioned, immature with a lot of momentum traders and a lot of newbies who can lose conviction. So even if the market should be worth a certain price, but everyone is moving in the other direction because there's irrational fear in the market. Um, the whole market has a potential to lose a lot of its value and bottom out pretty low. So I do think it makes sense to keep cash around, and if you get to those low lows, buy at those levels. Um, Personally, I am not selling my positions, but as the market keeps going down, I am dollar cost averaging down. So I will keep buying, and I might even leverage up if we go to low lows and buy more at that point if we see really, really great deals.
So, um, I'm comfortable trying to time the market. Um, since I come at this kind of from a technical analysis side of things, I have a hypothesis and I'm willing to test it. If I'm correct, then I could potentially maximize what I could get out of it. And if I'm wrong, then I it's not like it's zero sum. I still have kind of like a contingency or like a sort of invalidation scenario. So if I see the prices crossing a certain threshold, then I'm willing to change my view. I kind of keep this as like kind of have it like a scientific method instead of trying to put too much emotion in it. I don't really pay attention to a lot of the emotional sentiment in crypto, which I see a lot of, and I think it can be pretty harmful for quite a few people who maybe aren't very sophisticated in markets in general and how they work. I think a lot of people can get goaded into getting into something because they see someone talking about some great thing in the markets, and then they kind of get burnt from that, and I think that kind of sucks. Um, so part of me is a little bit excited to see the discrediting of the up only people who think that Bitcoin is going to 100K tomorrow.
What are your What's your perspective on the crypto market long term?
Long term, I do think we have very bright potential ahead, but I don't really fit into either category of either the people who think that Bitcoin's going to be worth $1 million next year, or Bitcoin's going to zero. I think with the sort of long term perspective, we need more and more money to come into the market in order to make more and more gains on these things. And so I think we're going to see a little bit of a maturing of the crypto market. I think it's going to be a lot more tame in terms of future valuations going, super high and super crazy. I mean, this doesn't necessarily mean that we can't find some assets that get a lot of potential. Usually that comes from Bitcoin. We're going to see, in order for one asset to gain a lot of money or to gain a lot of value, you need to shift around value from other assets into that asset, which means that one will go up and others will go down, sort of proportionally. And that is bound to happen unless you have huge inflows of money from outside the crypto market. There's no way around it. If you only have $1 to spend, it has to go somewhere inside this market. So what's your perspective on the long term?
Right. So to answer that, I think I should start by saying that there's generally three ways that you can price an asset. So you can do a discounted cash flow analysis, which is what I'm most comfortable doing. The second method is you can do a relative price analysis. So you can look at other assets in the market and see if your asset is doing better or worse. And thirdly, you can do an asset replacement or sort of a balance sheet, a book cost evaluation, which this last one doesn't really apply to crypto or I think to tech in general because it's not an asset heavy class. So you're really left with the first two. And the first one, which I'm most comfortable with, is very hard to do at this moment in time because I think the future is very unpredictable. We don't know what the cash flows are going to look like. We can speculate, and I've seen some people do that. I think it's a bit early. We don't know how the L1 war is going to play out. We don't know how big the market is going to be and how fast it's going to get here. I mean, it looks like it has massive potential, and I believe in it, which is why I'm actually working in crypto. But doing a cash flow analysis is very challenging, I think. At this point, it doesn't have a ton of validity. So what you're really left with is relative valuation, which on its own, without the first valuation method, isn't amazing because you're just weighing assets based on the value of other assets, but the whole market could be mispriced, right? So you really, you get a better deal if you do good relative valuation than buying a different asset, but maybe you're overpaying across the board, right? So I view crypto as, generally speaking, very, very speculative at this point still. And I try to keep it around 10 or 20% of my portfolio. And I plan on increasing that over time as the market becomes more mature and as the market starts looking more like the stock market, which I think is where crypto is going. So yeah, we're going to have this store of value idea still in crypto, but I really see the future where people are really just building companies in crypto on the blockchain. And instead of listing on the S&P 500, instead of listing on the NASDAQ or the New York Stock Exchange, you're just going and listing right away on the blockchain. So it's going to look like a stock market in my view, and it's going to be easier to price assets, and I'm going to feel more comfortable putting a larger part of my portfolio into these assets at that point. So I am quite bullish in the long term, but the real answer is I don't know, right? Let's see how this plays out. I want to have a part to play in it, and I want to keep my ear to the ground and sort of know everything that's happening so I can pull the trigger on putting a bigger part of my portfolio in the market when the time is right. But right now it's sort of it's my speculative portfolio is really on blockchain investments at this point.
Cool.
Yeah. It's always funny that investors really dislike bear markets, but
Yeah.
essentially we're saying don't panic, and you have two options. You could buy like low, like we're planning to buy, like you're planning to buy.
Mhm.
You can time the market, or you can not time the market. But I'm saying be reasonable and keep buying as prices go lower. And you're saying time the market, but we're essentially saying do not
Yeah, I
lose your
mean,
head.
there's no reason to think that this thing's just going to all go
Yeah.
away. Bitcoin has gone down very far before. So has Ethereum. I mean, Ethereum went from, I don't remember my numbers perfectly, but it made a high of like $1,000 back in 2017, 2018, and it came down to a low of like $70. If you were in the market at that time, you would think that this thing is dead. But if you're aware that it was that whole time, it was growing massively, and then it led to Ethereum exploding after that point.
So huge opportunity. I always find it funny that people really dislike bear markets, because if you're a long-term investor and you're young, a bear market and you're still buying,
It's the best thing for you.
It's the best thing for you. It's the time where you can accumulate at a great price.
Yeah.
So let's not lose our heads. Let's look for opportunities and take advantage of potentially low prices now and potentially lower prices in the short to medium term.
Yep. Sounds good.
On that note, thanks a lot for listening all the way to here. Please subscribe if you haven't, and like this video. It'll make Jared very happy.